We have Todd Shaffer, who's the manager of research.
Let's take a quick look at a market timing graph because I want to give you the context kind of my approach. Just the price is all we need. So, right, we're in this little pullback. The primary wave changed. We got a couple red bars. We're on a nice little bounce day today, but the primary wave is down and likely to stay down for at least the next 2 sessions. So in the face of that pullback, I'm still bullish because we're still in trend, but we're seeing some weakness here, right? So I want to be a little bit careful. And so in that context, I try to answer the question, okay, well, what is currently working in the market? And I've been here a couple times, so those of you who listen to me at all know that I love to take the sector approach to this. So I run over to the Unisearch tool, and my go-to search is in the Delta Searches group. Delta Searches sectors. There you go. I like sectors instead of industries. They're just more breadth. So we're going to do the 10-day RT Delta and go ahead and run the search. So this is looking for, on the sector level, the sectors that have had the best 10-day improvement of the RT value on a percentage basis. And so you can see running it currently, drug, steel, mining, container, right? So that's intraday data. Of course, I did this research yesterday after the market close, and the top performers were mining, drug, and healthcare. So we've seen a little bit of move. Some of the steel performance was due to some tariff news overnight. So let's just kind of take them in turn. At the time I did the research, the drug sector was in the top. So just right-click on that, Glenn, and view the stocks in the sector. So now I'm presented with a VST list of all the stocks that are in the drug sector. Now, to David's point, the biotech industry or sector is a little bit exciting, right?
For the adventurous investor, yes.
So my pick out of these was NBIX. Got solid fundamentals. It's in a nice strong uptrend, right? If you scroll over to the right, you'll even see that it has some pretty good earnings growth. Right? We've been talking about that a lot lately, right? At 39%. Right? So on the fundamentals basis in this sector, that's not small potatoes, right? So now let's look at the graph. So I like to start with a 1-year look back. Right? I'm looking for that bottom left, upper right, smoother the better, but particularly with hot stocks, I'm looking to see that the stock is still accelerating. Right? So I see this nice price action. It's consolidated a couple times, right? We're in the ramp up. Earnings per share is bottom left, upper right. RT is still accelerating in the near term, right? Since really October on this last turn. So if I look at let's do 2 different time frames. I like to look at different time frames. So first I back off to the 5-year. Let's go that way. Right? And actually holding up pretty well for a player in this sector, right? I'm off the high, so I note that I have some resistance I'm coming into, right? This is on a weekly graph. Anytime you do the quick jump to 5 years, it goes to the weekly graph. So there's my resistance at the 5-year high. But I'm at 118, and that high is where, Glenn? At 126. So I've got a little room to run here. I do see the price action slowing down a little bit, so let's jump. Now we're going to go to the other end of the spectrum and look at the 3-month, or the 6-month, 6-month, I suppose. Right? I can see the price action over the past 5 sessions really consolidating here, right? Well, so's the market. So I saw a lot of that in these top performers that they had slowed. A lot of the stocks in the cohort have slowed as the market has stalled here momentarily. So let's play the breakout, right? We'll let the consolidation resolve. Let's play the breakout, let it come to us, assuming that the market also comes back to us. Because really that's the linchpin for me, is waiting for the market first to show the way. All right, so that's my pick on NBIX. They were in the news. I did, to make a note on the news, they just entered into a cooperative agreement to get an epilepsy medication. So that's on the back burners as well. So the other thing I want to talk about is, okay, that's the stock play, but we know the sector is, as we said, adventuresome, right? because so many of these players rely on something in the pipeline, something under development, some kind of a news-driven event. So you also have the sector play. So we can go to however you want to get there, we can go to the viewers tab and do the ETF sector. Let's just go to the sector, which in this case is XBI. It's the Spider Biotech sector ETF. You see the sector itself has been in a nice run from October, and if you've been following the markets at all, you've seen how many biotechs are at the top of the VST list. Right? So there's my sector play. It's just now coming up to resistance. If you go back to the 5-year here as well, Glenn. All right, start with a horizontal line right at current price. And you can see we're right at retesting that high from the beginning of the year, right? And then you have the ultimate high in short order after that. So be a little careful here, right, for the sector and certainly for XBI. Again, I'm letting these things come to me though. I'm just identifying what's currently in favor or being favored by the market and trying to jump on board, particularly if they continue to run after the market starts to rise again. All right, so let's go back to our search. Our second best performing sector was the mining sector. So let's right click on that and look at the stocks in that sector. And again, on the VST sort, our good friend Sibanye. How many times have we called Sibanye, right? I think it's Steve's favorite gold trade.
No, actually, it's Kirkland is his favorite.
Is it? Okay.
Kirkland.
Well, I know Sibanye has been in the mix a lot.
Yep.
Right? So good upside potential, earnings growth rate again, pumping for this stock. Safety a little bit under average, so a little bit more volatile, and of course, very heavily driven by the sector. Now on Monday, we did the gold bugs timing, and the gold bugs timing study is still bearish, hasn't crossed back into bull territory yet. But the sector analysis is telling us that the sector is making a move. So we're a little bit early on the timing aspect of it, but on the stock play, on a sector play,
So what
now.
Todd is saying
It's time.
is it's a mover and a shaker. Even though it's not rocking, even though it's not bullish by way of what we do on Mondays, but it's a mover and a shaker.
and I'm playing it on that basis,
Right.
right? Because it's coming up in the sector analysis.
A big part of Sibanye's earnings is platinum, and I see Impala Platinum's number 2 on that as well.
Yep. That was one of my picks last month, actually, was IMPUY. And it's still rocking and rolling.
Glenn, that story that I told you about my first speech in the stock market, where the guy had laryngitis.
Right.
That was the managing director of Impala Platinum.
Really?
Yes.
Okay.
He had laryngitis. He was the speaker.
All right, let's take a look at the chart.
Yeah. I'm sitting there, I'm like, what am I doing? All right, let's go to that.
I'm here to remind you.
I'm never at a loss of what I'm doing. So, Sibanye, I'm still at a loss. Okay, there we go.
All right, starting with the 1 year chart as ever, right? Bottom left, upper right, smoother the better. All right, and even during the lulls, if you will, in the market, it's still held up pretty well. RT is accelerating into the current time frame. Earnings have never stopped, right? At least since March. Right, so nice uptrend there. If I go to the 5 year, right, I'm off those highs, but it looks like I have a pretty good void up into that next level of resistance.
That's a
at 10
lot
bucks.
of money to be made right there.
Right, you've got some resistance in 10 bucks, but then
Yeah.
nice upside up to the high there.
5-year graph on a gold stock is eternity, right?
That's
Yeah,
well,
it's
yeah.
eternity, yeah.
Good point. I'm just trying to look left on the graph to see
Sure.
where I might have a roadblock.
Of course, yeah.
Right, it's just part of the standard drill. And then if you go to the 6 month look, my hardship here is I just did the gap. Right, and so I'm looking for that gap to follow through. So we may consolidate here a little bit, do a little churn and burn as the market digests that over time. And this, of course, will also be heavily impacted by what the market does. If the market continues to retrace, or if it starts to run again, and we go risk off, or risk on. So, if I get the follow through and the market cooperates, but particularly if I get the follow through, that gap gives me a nice threshold for my stop loss, and we're off to the races. Or you can go to the previous pivot if you want, or weak resistance.
The gold price
weak
could also
support.
do an awful lot of good. The gold price is sitting. It could. It's pulled back to those Fibonacci people listening to 62% of the last range, and the gold price, to me, looks as if it wants to push strongly into March 2020. So the gold price would also do an awful lot of good.
And a lot of these is what David called punts. Your buy stop and your stop orders on the way out are going to be very important on these type of trades anyway, right? I mean, would you look to put the buy stop above that yesterday's high, or would you, right? Or would you get in before that?
Well, yeah, I'd let the price action show me a little bit. So instead of just blindly buying the higher high, I am looking for a bullish candlestick that penetrates well into
Some
that price
confirmation
action.
behind
Yeah.
the move. Gotcha. That makes sense.
Yeah, a wide-ranging day, even though it's still moving sideways, could put you in accidentally.
The share's shown incredible relative strength. If you look at the Barrick share, for example, during this period, Barrick has sold off pretty much every other gold share in the world, has sold off with the gold price. And this one hasn't. Has a bit of platinum in there as well that's helped it. But if the gold price should turn, this thing will fly, I think. Yeah.
I agree. All right. Let's get into your... This is your last stock?
Yep, third, let's in healthcare, let's just stay with the chart. We don't need to go.
Okay.
We don't need to go see it. Looking at the 1 year, price action consolidating here for a long period of time here, and I certainly want to go back and look at the 5 year, right? So we broke out of that on David's gap at 140 back there in the beginning of November. Been a nice follow through since then. Looking at the 5 year, say, wow, okay. So in that context, nice progression here, consolidation through the middle of 18 into 19, and I'm breaking out of that. So nice acceleration of RT coming back, and earnings never gave it up.
Yeah. Even when it consolidated.
Yep, so let's go back to the 6 month and look for our entry. I'm just coming back on today's action, right? Yesterday we had I'm looking at it with a pullback. We got a bounce day yesterday. I'm thinking, well, nice, right? That gives me a pivot. Nice breakout above to the new high is my entry, and there we go.
Actually, that's a good candlestick pattern. Bullish engulfing with follow-through.
Yeah.
That's it, right? Bullish engulfing with follow-through. Rising earnings, rising RT. Actually, today would have been a good day. With today's prices of the market are moving up, today would have been your confirmation just off of that candlestick pattern right there.
Yep, and I might start nibbling because the market conditions overall are still weak.
Okay?
But I could start building a position with a little nibble here if you want to be a little more aggressive.
I like that trade as well.
As an aside, gentlemen, the gap through the trend line with rising earnings per share, I think is probably one of the highest hit rate phenomena that I've ever come across in markets. And that's why I call it the rocket launcher. And in the UK, we have swing traders that I've taught this to who do nothing else but scan through the 2,200 shares in the London stock market, looking for obvious trend lines in shares with good fundamentals, but especially that earnings per share. So as you can see, from the two highs to there, if you look down below, you can see earnings per share is rising, and then you get the gap, and the gap just means that something has changed, and the chaps in the city or on Wall Street have been told to buy it at any price. Don't try and finesse a good entry, just buy the bloody thing. And that's exactly what's happened there. Outstanding trading technique to enter positions.
Thank you for taking the time to watch this video. Now, if you're new to the software or would like refresher information about the software, click on this Getting Started video right here. Thanks to all of your input, here's a YouTube video that we think would be perfect for you. Click right here. If nothing else, folks, just hit the subscribe button right here.